need a lot of size to trade the S&P, probably size that once I would have been comfortable with, but as I get older, I think your risk parameters change, and what you can lose changes. So I think that's a market that you do need a lot of size to trade. So for me, bonds and stocks is where I sit. I keep an eye on everything. I think everything is correlated. Whatever position you're putting on today, you're trading the oil. Let's be honest. If you're buying Euro stocks today, it's only going up if oil rallies. That's how it is at the moment. Things come in fashion and out of fashion, and you've got to be very, very aware and fluid as to what you're looking at. So that's where I sit at the moment, bonds and stocks primarily.
Okay, so Dan, if you could speak to us about the importance of the price ladder for your trading approach, and maybe just take it back a step. What actually is a price ladder, and what type of information or insight does it provide you with?
The price ladders, it's basically your market depth, and it's how I would say 95% of the industry, trades with whatever their market is. And watching your price ladder and watching your price action should and will eventually either give you the confirmation that your ideas are correct, or it will give you the confirmation that you should stand out of the way. So you've got your market in the middle, you've got your prices down the middle of the price ladder. So at the minute, for example, the Euro Stoxx is trading 29.30.31, and if through the middle of that price ladder you'll have prices going 20 ticks higher and 20 ticks lower that maybe you can visually see, and you'll have a depth of market that sits either side of that. So you'll be able to see, if the market's 29 bid at 30, you'll be able to see what orders are sort of running down the ladder to 19, and what orders are running up the ladder to about 40. And it's an amalgamation of orders, and it's constantly changing because obviously there's so many spread algorithms or just natural algorithms that price ladder is always moving, and the bids and offers are always changing. But it's really the significance of what you can see going through at the price that you want to trade. So you will have your predetermined plan. You will, for example, I don't know, if the Euro Stoxx runs down to 80 today, you might be thinking, okay, I want to buy 28.80s. But as it gets there, you'll start monitoring the price action. You'll start monitoring what's happening. Are the sellers more aggressive? Are the sellers in control? Are people pulling their bids off of the ladder because they're too nervous? When it gets to your price, is someone reloading the bid? So, for example, he might start with a 200 lot, and as he gets hit on 50, he might reload it and put another 50 on and another 50. And there's all these techniques, and they take hours to learn. And, really and truthfully, before, up until very recently, you could only learn these things actually on a live price ladder. Even the simulators, you can't quite see what's going on as well as you can on a live price environment. So it really is that last piece of the puzzle, that last sort of checklist that tells you whether you want to be interacting. And there's lots of tricks and there's lots of games that people play on the ladder, some of them legal, some of them in a grey area, some of them not legal at all, but they do still get played. And these are all sort of short-term price increments that you can take advantage of. Someone might move the price up by 4 or 5 ticks without it trading, and then pull the bids thereafter. And you can really, as a day trader, you can really take a lot of these smaller price increments out of the market, as opposed to as well as using that price ladder for your your really sort of major confirmation bias as you get near areas that you want to trade. And we focus a lot on that, as a company here. All of our grads that come through, the importance of just watching that price ladder and understanding that price ladder, can be the difference between someone who makes a great living as a trader and someone who doesn't quite make it as a trader. There's obviously lots of other things that go into it. Obviously there will be, but that actually will be one of them. And we focus. There's a lot of attention that we pay to that. And I don't want to head down the route of major sales, but some of the things that we're inventing and creating are primarily based around the price ladder to help people understand what they should and shouldn't be seeing and accelerate the learning, because the learning curve for trading is very, very long and very, very arduous, and lots of people haven't got the finances to actually sort of stay the course and learn how to trade. So we're always looking at ways to kind of accelerate their learning, and sort of help push them on their way to a successful career.
Yeah, I mean, I did notice it was very prominent on your site, the price ladder, that is. So, I mean, that's sort of why I wanted to ask you about it. And just a quick one, just so we're clear, does the price ladder differ from level 2 in any way?
Oh, good question. I mean, I look, I'm so used to price ladders, I'd have to be shown a level 2. As far as I understand, level 2 is your market depth, but I'm not sure how that gets displayed on every other system. Our guys work off of 2 systems. They work off of TT and Neon. So it would really, I guess level 2 is that type of data, but I've got no idea how that would be displayed on various other platforms.
All right, that's cool. I was just trying to avoid any of the listeners getting caught up on terminology differences, but that's cool. So in addition to the price ladder, how does the market profile and footprint influence your trading ideas?
Market profile, it very, very much I think it gives me, a major edge. That people need to understand that no matter what they're looking at, these markets may appear random, but they're not. And I think people really do need to understand that. There will be short-term price movements that, might seem random, but they're not. And what the essence of a market is that it's just trying to find value. That's all it's doing. And the key difference with these markets is the level of uncertainty. So if you think of the short-term interest rate, we pretty much know what value is. We can base that on the fact that something is really unlikely to happen in the next 2 months, and interest rates are such that that is value. And if you think in terms of whenever you go to a shop, we all kind of know what perceived value is. A Mars bar used to be 30 pence, but now perceived value is 70 pence. And all markets are trying to do is find value. That is the basis of a market. And sometimes it will overshoot value to the downside. Sometimes it will overshoot value to the upside. But that is what it's looking to do. It's trying to find balance. And then once it's found balance, it will trade around balance. And then it will either shift or remain the same. That's in essence what a market is attempting to do. So if you think in terms of what a market profile is giving you, and it's telling you where the market perceives value at any given time, where the majority of volume is going through, and that's where the greater portion of people accept that value is. And then it's telling you when it's shifting. And yesterday, for a short time, perceived value in the Euro stocks, for example, was 30.08. And we traded there quite nicely. We did a fair chunk of volume. And we didn't really move for about an hour, more than 2 or 3 ticks outside of that. But then there was a shift. And the market moved, and the market started selling off. And then throughout the day, we were assessing where is value, where today does this market perceive value? And at sometimes it was 29.72, at sometimes it was, much lower. At the end of the day, our volume point of control, where the market perceived value to be, is 29.43. And we closed below that, but that is where the market perceived its value to be. And the context of what a profile gives you is where those value areas are, where the volume has been done, and where the market's attempting to seek balance. And if you can kind of get the idea that this is just one big auction, and this is one big auction where it can overshoot and undershoot based on participants' emotions and fear or comfort, then you can start to understand the way in which the market flows and the way in which the market ebbs and flows. And that's the key to what market profile does. Anything within a candlestick chart or anything within a bar chart, it's giving you the price data, it's telling you the highs and lows and closes, and it's giving you a pattern, but it's not giving you value. It's not telling you where people are accepting a value area to be. And I think that's really, for me, the market profile or volume profiling, it's taking into account, time and volume and price. It's taking in those three things. A candlestick chart, it's not necessarily giving you all of that information. It's giving you the highs and lows, and it's giving you a time bias, but it's not giving you the volume and the value. You could have a bar that is a 50 tick bar, but what does that really mean? A 50 tick bar from high to low to back into the middle. It doesn't give you enough of the story as to that could be done on 2-1 lots.
Okay. Yeah. I think you summed that up really well. That was a really good explanation, Dan. Thank you. Now, I've kind of gone about this back to front. I know you said you sort of come to the market from a top-down approach. I've kind of asked these questions in reverse. But besides the price action and, the things we've talked about with the price ladder, the market profile, etc., you said earlier on that you take into account the big picture. So explain to us or just give us a little insight into what kind of macro events and fundamentals have an impact on how you trade.
Yeah, I think you have to be a rounded trader. You have to know everything that's going on, because if you sit here and, in the times that we're in now, if you sit here and you're unaware that oil's collapsing and that it's come down from wherever we were, $100+ down to $30, and you're still sat here buying equities, then you're a fool. And you have to absolutely know what's going on around you from a macro and a fundamental point of view. And it's so key and it's so important. And some of our, when we do prep our grads, and some of it we televise, some of it we don't, but when we prep our guys, the fundamentals will always override technicals, in my opinion, in the short term, because the market will overshoot and undershoot based on the significance of the event that is happening. And you can't tell me that, in today's day and age, unfortunately, with all of the fear and terrorism that's going on, that you're going to sit here and sell buns because you've got a 5-minute trend line over another disastrous attack. You'd be an idiot. But above and beyond that, you're knowing what the ECB are doing, what the Fed is doing, what the Bank of England is doing, it's absolutely paramount. The moves do stem from that. At the moment, we are categorically, absolutely across the curve pricing in negative interest rates. And you have to understand that, because otherwise the Bund looks like the greatest sell in the world. at the moment. You know, you're sat here and you're thinking, oh, it's gone up, it's got this, and this is where I got sucked in yesterday. I actually did go short bunds. I don't ever advocate that. I'm a perma bund bull, but you can't. What we're doing is we're pricing in a very, very fundamental and macro situation where people are now expecting, in light of what Japan did, people are expecting negative interest rates. I mean, I can't quite believe it, but they're pricing in negative interest rates for the UK. It wasn't that long ago that we were talking about rate rises. So you really do have to. You have to be a rounded trader, and I hate it when people try and convince other people that there is this one system or there is this one technique that is the holy grail and will make you, a multi-millionaire this time next year. It's just not true. It's just not. That it's a whole multitude of things from, as you point out, from the macro to the fundamental, all the way down to and every step in between, all the way down to your price ladder confirmation or your footprint confirmation. I mean, that's just the fact. Every trader I know and every successful trader I know is a very, very rounded out person. And some of our ECB discussions border on policy making. Sometimes I sit there and I think we're getting so in depth as to what they could and couldn't and should and shouldn't do that, they might as well put us in charge. But that's just what it takes. There's no one single silver bullet. It takes everything, an understanding of everything.
Yeah, brilliant answer. I'm glad I did ask that question.
Ever watch a stock rip and think, I could have nailed that if I had real capital? The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, access has evolved. Now, so has the way traders operate within them. Trade the Pool.
So I'd like to steer this conversation more in the direction of prop trading now. So I'd like to ask you, what are the advantages of trading with a prop firm? And I know it may be a little hard to answer this without some bias, but is there also a downside to prop trading too?
Okay, that's an interesting question. I think for sure prop trading is not for everyone. I think that's a fact. The advantages, if I were to try and sum it up without being too heavily biasing, as you say, which is quite difficult, bearing in mind that I run a prop firm and we've got sort of training courses. But I mean, look, we can. What we try and do is we try and give people the financial backing that they would not normally have to enter into this career. We try and give people the accelerated learning and point them in the right direction. I know that everything is available on the internet, but to sit with people who have been doing this for, in my case, 20 years, my partner's case, 25 plus years, and some of the traders that we've had here are now sort of 10 plus years. To sit with these guys and to be able to be told what works and what doesn't work and what they should be looking for without getting sold anything or being given, misguided influence, parting with their own money, to no avail. To be given all of this, I think, is an incredible advantage, and that's before you even start on the psychological and the mentoring support that these guys get. So, for me, there are all of our highly successful traders that are here. They wouldn't be here without us, but likewise, as a firm, we wouldn't be here without them. So it really is a partnership that we try and develop and that we try and, bring through. And I think in a retail sector, when you're sat at home, you've only got one pair of eyes on the screen, you're stuck with your thoughts all day that will waver from, this will work or that won't work, or I'm not going to hang on to this trade because I'm scared, or any of these things that you sort of challenge is a challenge for yourself when you're sat at home. I think you can alleviate some of that pressure when you're in a prop trading environment. Now, the downside is that you're in a group of people that are hitting a higher end of trading. So we're not trading now for $100 a day or £100 a day. We're putting through thousands of round trips, and we're trading for, if not 5 figures, 6 figures. And that's not for everyone, because it takes a certain character, a certain characteristic to be able to take on that type of risk. And there are a lot of people that I'm sure are sat at home, are very good traders, who I do have respect for in terms of their knowledge and what they can impart and how they could maybe mentor, but they're just not cut out to trade in a prop firm because their risk parameters, their personality just doesn't line up with what it takes to be in this type of firm. So, it's not all about the money. It's about the personality and what you want from life. It's a much deeper question.
So do you think that the risk side of things is something that can't really be taught or developed? It's sort of almost like something intuitive that you kind of have built in. I don't know if that's a good way of explaining it, but I think you know where I'm coming from.
Yeah, I know. Yeah, to a large degree, yes, I think it is built in, and I think you can't necessarily teach someone how to take on risk, or how to be comfortable with risk. I mean, the irony is we do have a couple of traders that are probably the most risk-adverse traders I know, and they will only ever be looking for 1 or 2 ticks maximum within the market over quiet periods of time, because they don't have the personality trait that makes them want to take on risk. They have a much different way of going about trading. So it's interesting. It's these guys have managed to find a way of trading without taking on any risk, but I think they're few and far between. I think they're pretty special traders. I think the biggest overriding problem most people have is being able to put on a trade and then deal with it going offside or coming back at you, or sitting in a trade and being patient enough and taking on that risk. I would say is most people's overriding issue. It's a difficult one. I mean, I've got to be honest. If I had the magic answer as to what created a successful trader, I'd have replicated it, and I'd probably be in charge of a firm bigger than Goldman Sachs. But it's really hard to pin what specific characteristic makes a good trader. And don't get me wrong, we have tried. We've looked into it, be it psychometric testing, be it personality profiling. There is no constant, and that's quite hard. It makes it hard when you're taking someone on to know quite whether they're going to make it as a trader.
Okay, so let's talk a little bit about the learning process that new traders go through when joining the firm, and how does the whole financial backing work? Like, how is it structured, and what's the process that traders go through to get funding?
Yeah, well, initially, there's kind of two ways in, I guess, to our firm. We have a certain amount of sponsored places that we will allot per intake. So at the moment, we're currently running about 4 intakes a year, and we look to, people apply. We obviously go through their CVs and we bring them in and do a couple of tests. But the reality is when it comes to the interview, it comes down to trying to get a read of the person and a read of the guy, and it's quite hard because obviously an interview is such a it's such a false environment of how a person really behaves. And on top of that, they're behaving without ever having really interacted in the markets these way, in a proper sort of environment way. And it will certainly teach them things about themselves that they didn't necessarily know before. So we offer these sponsored places on each course. The remainder of the places go to people who are willing to sort of self-sponsor themselves, so I pay the fee and come in and train under the same sort of banner as our sponsored guys. And the way we structure it is the first 4 weeks, we really have sort of tailored the first 4 weeks to a lot of classroom theory, and it's a necessary evil, I'm afraid. There's not really anything you can do about it. I think it's probably their least enjoyable time and the trainer's least enjoyable time, because it's a lot of theory, but you have to go through it. It's like I was saying before, whereas I didn't know what impact non-farm payrolls or a rate rise had on the markets, and that was accepted back then, it's kind of not accepted now. So we have to train our guys, we have to teach them, we have to make them understand, and then we start giving them the techniques that we start to use, and we give them what we perceive to be the sort of charting armory that they need over that period of time as well. So that's the first 4 weeks. Now the second 4 weeks really is where we start to drill into the price ladder, and what we've invented and what we have is, it's actually probably the thing I'm most proud of at the moment that this company has done. But we have these what are basically price ladder drills, and instead of them just being a normal simulator, we've been recording data for many years and bringing it onto a platform where actually for the first time that I'm aware of globally, people can interact with. So it's not a simulator, it's not a live market, it's like a replay data of, say, the past 6 or 7 ECB meetings, but traders can actually get involved instead of just watching the data, and instead of just watching what may happen in the market. We've given it the ability that traders can interact with that, and they can actually trade it, and they can have a P&L off it. And I mean, to me, this is the key part of the course. This is the gold dust, because up until this price ladder product that we've got, the only way you can get involved in an ECB meeting is to trade it once every 6 weeks now, and trade it either on a sim or live. And if I'd have been able to go back in my time and had a learning curve where actually I could trade 10 ECB meetings over the course of 4 weeks, or I can practice 10 ECB meetings or 10 non-farm payrolls or whatever the figure is, and practice that over the course of 4 weeks, that would just, would have sent my trading on an absolute stratospheric arc. I mean, it really is just something that those middle 4 weeks, and the price ladder drills are just so key. And to be able to go over and do these things, and it's not just the ECB, it's, it's non-farm payrolls, it's Bank of England, it's whatever rate announcement there may be, and it's also techniques that we've identified. So there's certain bits that specifically tell you how to trade if there's a flipper in the market, or a layerer in the market, or all of these other things that we know shouldn't maybe happen but do happen. We've got the ability for people to actually interact with these things and actually trade these things. And that for me, as I've said, accelerating people's learning is really what we're all about and what we're really attempting to do. And the back 4 weeks is where we start putting them on simulators and actually start monitoring them at their desk, and monitoring their progress, and monitoring how they actually trade in a simulated but live data environment. And it's then that we start making decisions about whether we can put people live, or whether we're willing to back people. We've had a couple of people who have actually sponsored themselves to come on the course, but have then gone on to want backing, which we have done. So it's not as if they pay for a course and then we just sort of send them back out into the wide world to fend for themselves. We've got 3 or 4 people off our last course, one in the States, that we were so impressed with how he was getting to grips with trading that we've actually backed him to trade from the States remotely. That takes a hell of a lot of trust, because you're relying on someone to actually behave themselves and adhere to stops and risk management from where really the only control you've got over it is your first port of call is Skype. The second port of call is if they're not responding, you're blocking accounts. Can't go over and talk to them. So, that's really in a nutshell how everything works. We look to back people, we put them on a contract, that gives them our backing, and it gives them our finances and our time. So instead of only being able to start trading a pound a pip or a one lot, we put people into the market trading bigger than one lot so that they can actually make a living. And obviously in return, there's a percentage that would come back across to us that scales up the more money that they make.
Very cool. So after that 12-week program, the initial kind of learning process that they go through, how long do you anticipate before newer traders to the firm actually reach a level of some consistency?
Well, consistency on the sim is very different to consistency live. I think everyone, I know that a couple of the Twitter guys like to call them demo ballers, which is quite an apt name for them. It's one thing taking a fake position and being able to run it offside and then see it back to a scratch and then see it offside and then take it to a profit. And I think gaining consistency on the sim is pretty straightforward. Unfortunately, it's the only benchmark we have. If there were another way to go about it, I would, love to know, and I would drop the sim. But, the majority of people around weeks 20 through to 24, so that's that 5 to 6 month barometer, should be looking to have achieved some form of consistency on the sim. If they haven't, then we need to really start questioning their techniques or their suitability to actually the career. And then that's when we'd look to put them live. And of course, that's when probably the biggest issue that any trader will ever have starts coming into play, and that's their psychology. And that's really where, unfortunately, we do try and help. We do, I'm not a psychologist, but I have got 20 years of experience attempting to help people through it. We do employ someone who comes in and tries to talk to them, but it's really where our control starts to get incredibly limited, and our ability to influence these guys starts to get less and less, and it starts to become about them and about their psychology and their hunger and their desire and everything else that comes into a trader's mindset.
Sure. So, just generally speaking, what's the average kind of success rate of the traders that you fund? Because, everyone's heard the statistic that 90 to 95% of traders, retail traders, fail, they blow up, they, go out of business. I presume it's more weighted in your favor as a funded trader with a prop firm.
Yeah, it is, and I think that's one of the key advantages. I'm not going to say, it would disrespect the whole interview and make me look like a mug if I said that 100% of the guys that come to us go on to be successful traders. It's just not true. I think the statistics are slightly better and in our favour. I've never worked them out to put a number on it, but the reality is you're still not even looking at 50-50. I couldn't say that half of the guys that come to us end up making money, because it's just not true. What I can say is the ones that do make it make a significant amount of money. They're not just making the equivalent of a 50 or 60,000 pound a year career. They're making 6 figures a year and on their way to making 7 figures a year. That's really where the key differential is, that the guys that actually are successful and the money that they make is vastly in excess of what I would imagine the retail sector is doing. But yeah, I'm not going to sit here and say that we knock it out the park with everyone. The one thing that I would say is that most of the people that do leave us will acknowledge that they've had the best chance that they're ever going to have at being a trader within our firm, and probably 95% of them actually leave and go on to take a more stable and a more career-based job that they're probably suited to. 5% I know will go and attempt to trade somewhere else, but within 3 or 4 months I end up seeing a reference because it hasn't worked out at the other firm that they've gone to. So the reality is they go to another firm thinking there might be a holy grail there, but they find out that they're still the same person, they're still the same trader, and the markets are still the same markets. So that's really, all I can say from a prop perspective is I think the people that don't make it have had the best chance that they have had to make it and just realise that trading's not for them and move on. I think our stats are better than 90%, and that those that do make money and are successful make substantial amounts of money and go on to achieve great success, not just, I hate the word mediocrity, but, a lesser degree of success. I think that's probably the fairest and most honest way of answering that.
Yeah, no, I appreciate the honesty, Dan. That was a really good answer. So let's just do one last question to take us out. And this is maybe just some, I guess you could call it parting advice for traders listening. So if someone is feeling completely lost and frustrated as a trader, they're perhaps not sure where to turn, what advice would you give to them?
Step away for a little bit, get some clarity. You need to, if you're really at a point where you're that low, you're not going to make money. You're not going to turn it round by sitting in front of your screen. I honestly think you need to get away. You need to take a mental rain check. Probably need to do something completely unrelated to the markets in any way, shape or form, and not push for an answer. I think the answer will come to you. I think man's thinking, although it's its greatest asset, can also be its greatest enemy, because we can all constantly overthink things that are very, very simple and straightforward. So get away, get some clarity, understand what it is you want to achieve, and if you do want to, come back to trading, then I honestly do believe you should seek professional, trusted advice. There's no holy grail. Um, there's no single answer. It's a myriad of approaches from, as we've discussed, from the macro fundamental all the way down. And I do believe that having a support network is incredibly key. Whether that support network can be, your family to discuss things with, or other people in the industry whom you trust, or a firm. There are those options to sort of seek that advice and help you achieve your dreams. So if you are sort of stuck in the mud and you really, really are suffering, I think, pride comes before a fall. So, reach out to someone and get some help.
Brilliant answer, Dan. I really like that. Well said. So, do you want to share with listeners, just before we go here, where they can go to find out more about you and how they can connect with you?
Yeah, it's pretty straightforward. If people want to get in touch, they can visit either of our websites. There's a lot of information on futexlive.com. You don't need to part with any money. You can get yourself a 7-day trial and you can have a look through there. All of the guys that either stream on the live terminal are trusted, profitable traders, and they share their advice and they share what they're looking at in the market. You'll find me on there 2 or 3 times a week giving my take on the market. And for anyone who does know me or does follow me, my take on the market is not 100% accurate, but it's certainly closer than a lot of other people out there. So have a look around futexlive.com. See if it's for you. See if you like what's there. There's absolutely no commitment required. And then you can get in touch via there. Or have a look around futex.co.uk. That's more of our sort of trade facilitation website. So you can get the gist of what we do there. And of course via Twitter. The prop industry is, pretty rife on Twitter, and it's very, very quick and easy to find out who is legit and who knows what they're talking about and who is, not quite as legit and doesn't know what they're talking about. So any tag, you can just look up Futex Live, and my personal tag is at DMG_Futex Live, but any of the traders that are set up on there are professional proprietary traders. They're also profitable traders, and people that we kind of link with on there might be in the retail sector or abroad, but there's certainly a wealth of information that other people have got as well. So have a look around. I'm not here to give a hard sell. I'm not a salesman. That's not my thing at all. But I do enjoy helping people achieve their dreams, or at least making them realise that their dreams aren't quite what they think they are.
Very good. Okay, Dan. And guys listening, I'll be sure to include all those links at chatwithtraders.com/59 in case you want to find everything all in one place. Now, Dan, I hope you have a great trading session ahead. I know it's early morning for you. Thank you very much for your time and sharing your insight. Let's stay in touch.
Yeah, pleasure. Happy to do it again whenever you're ready.